1945. World War II ended. Britain had won the war but lost the empire. The cost of victory was subordination to American economic power. Britain emerged from the war with debt exceeding GDP, gold reserves depleted, and infrastructure destroyed. Meanwhile, the United States held 2/3 of the world's gold, ran massive trade surpluses, and possessed the only major industrial economy undamaged by war. The power transfer from British Empire to American hegemony wasn't gradual. It was a financial transaction completed over 11 years from 1945 to 1956. The mechanism was Lend-Lease debt and post-war loans. Between 1941 and 1945, the United States provided Britain with $31 billion in military equipment, food, and raw materials under Lend-Lease. This assistance was essential. Britain couldn't have continued fighting without it, but it came with conditions that fundamentally altered the global balance of power. The loans had to be repaid in dollars. British trade preferences had to be dismantled. Sterling's role as reserve currency had to be subordinated to the dollar. These weren't just economic terms, they were the price of American support, and that price was the British Empire. This is the story of how World War II debt destroyed British global dominance, how the 1945 Anglo-American loan forced Britain to dismantle imperial trade preferences, how the Suez crisis in 1956 demonstrated Britain's subordination when America threatened to collapse the pound unless Britain withdrew, how colonies became independent not primarily from nationalist movements but because Britain couldn't afford to maintain control, and how the systems created to manage this transition, the IMF, World Bank, and dollar-based international order, institutionalized American hegemony. Understanding this matters because the same dynamic operates today when countries become dependent on foreign creditors. Debt creates leverage. Creditors can impose conditions that constrain sovereignty and reshape policy. Britain experienced this from the American side after being the dominant creditor for a century. The reversal was swift and total. Within a generation, Britain went from controlling a quarter of the world's territory to being a middle power dependent on American security guarantees and financial stability. Britain entered World War II as the world's largest empire, but already in relative decline. The 1931 sterling crisis had forced Britain off the gold standard. The empire was expensive to maintain. Military bases, colonial administrations, and periodic suppression of independence movements consumed resources. The economic benefits were real but diminishing, as colonies demanded more autonomy, and developing economies elsewhere offered competitive opportunities. World War II accelerated this decline catastrophically. Britain declared war on Germany in September 1939. For 2 years, Britain fought essentially alone after France fell in 1940. The cost was enormous. Britain mobilized its entire economy for war production. Imports surged, food, raw materials, military equipment, while exports collapsed as factories converted to war production. Britain paid for imports by liquidating foreign assets and borrowing. By 1941, Britain was running out of both. The United States initially maintained neutrality. American law prohibited loans to belligerent nations, and isolationist sentiment opposed direct involvement. But President Roosevelt supported Britain and sought ways to provide aid without violating neutrality laws. The solution was Lend-Lease, passed by Congress in March 1941. The concept was simple. America would provide war materials to Britain not as sales, but as loans to be repaid after the war. Lend-Lease transformed the war. Between 1941 and 1945, the United States provided Britain with $31.4 billion in aid: ships, aircraft, tanks, ammunition, food, fuel, and raw materials. This represented roughly 20% of Britain's total war spending. Without Lend-Lease, Britain likely couldn't have continued fighting. The Soviet Union also received massive Lend-Lease aid, but Britain was the largest recipient and most dependent. The scale was staggering. America sent Britain over 17.5 million tons of military equipment. This included 9,000 aircraft, Hurricanes, Spitfires, and bombers that fought the Battle of Britain and strategic bombing campaigns. Over 5,000 tanks and tank destroyers rolled off American assembly lines and onto British battlefields in North Africa and Europe. The Royal Navy received 100 warships, destroyers, corvettes, and minesweepers crucial for the Atlantic convoy battles against German U-boats. Food shipments kept Britain from starvation. German U-boats targeted merchant shipping, creating food shortages. Lend-Lease provided 4.5 million tons of food: wheat, meat, sugar, and oils. This was roughly 10% of Britain's wartime food consumption. Industrial raw materials were equally critical: steel, copper, aluminum, chemicals, and petroleum products. British factories needed these inputs to produce weapons, and Britain's own production and imports from Empire couldn't meet demand. The logistical achievement was unprecedented. American convoys crossed the Atlantic facing U-boat attacks. Materials arrived at British ports, were distributed to factories and military units, and integrated into war production. The coordination between American production, shipping, and British utilization represented the most complex international supply chain ever created at that time. It worked because both countries had existential interest in defeating Nazi Germany. The terms of Lend-Lease were politically generous but economically extractive. Roosevelt presented Lend-Lease as lending a garden hose to a neighbor whose house was on fire. You don't charge for the hose, you just want it back. But the reality was more complex. Lend-Lease required Britain to accept American conditions on post-war trade and finance. Article VII of the Lend-Lease Agreement committed Britain to eliminating discriminatory trade practices and reducing tariffs. This targeted the Imperial Preference system, trade arrangements giving British colonies and dominions preferential access to British markets. Imperial Preference was central to Britain's economic model. The system created a closed trading bloc where British manufacturers had protected markets in colonies, and colonies had guaranteed buyers for raw materials. Dismantling this meant exposing British industry to American competition and losing economic control over colonies. Britain negotiated furiously against Article VII, but ultimately had no choice. America's leverage was total: accept the terms or lose the aid and likely lose the war. The Imperial Preference system had developed over decades, formalized at the 1932 Ottawa Conference. Britain gave colonies and dominions, Canada, Australia, India, South Africa, preferential tariff treatment. British goods entered these markets at lower tariffs than American or other foreign products. In return, colonial raw materials, rubber from Malaya, cotton from India, wheat from Canada, wool from Australia, received preferential access to British markets. This created a closed economic loop. British textile manufacturers bought Indian cotton at favorable prices, produced cloth, and sold it back to Indian markets with tariff protection against American textiles. British steel mills used Canadian iron ore, Australian coal, and produced steel sold throughout the empire. The system guaranteed markets for British industry even as American and German competitors became more efficient. American producers hated Imperial Preference because it locked them out of the world's largest trading bloc. American cotton growers couldn't compete in British markets. American manufacturers faced discriminatory tariffs across the empire. American policy elites saw the system as economically inefficient and geopolitically dangerous. Closed trading blocs had contributed to the Great Depression and international tensions. Article VII was designed to dismantle this system permanently. The debt accumulated relentlessly. By 1945, Britain owed the United States $31.4 billion in Lend-Lease obligations, plus additional commercial debts. Britain also owed massive debts to India, Egypt, and other colonies that had provided resources on credit during the war, the so-called sterling balances totaling £3.7 billion. Britain's foreign assets had been liquidated to pay for early war expenses. The economic position was desperate. August 1945. The war in Europe ended in May. Japan surrendered in August. The United States immediately terminated Lend-Lease. No more aid. The tap turned off instantly. Britain still needed imports, food, raw materials, industrial equipment for reconstruction, but had no dollars to pay for them. Britain approached the United States requesting a grant or interest-free loan. America refused. The terms would be commercial. The 1945 Anglo-American loan negotiations demonstrated the power reversal. Britain requested $6 billion. America offered $3.75 billion at 2% interest. The loan had conditions: Britain must make sterling convertible within 1 year, dismantle exchange controls, and eliminate trade discrimination. These terms were harsher than Britain expected. John Maynard Keynes, leading the British negotiation, called the terms a financial Dunkirk. But Britain had no alternatives. Parliament approved the loan in December 1945 with significant opposition from both left and right. Labour MPs objected to American imperialism, Conservative MPs to imperial dismantlement. The loan failed almost immediately. In July 1947, Britain made sterling convertible as required. There was an immediate run on the pound as holders converted sterling to dollars. Britain lost $1 billion in reserves in 6 weeks. Convertibility was suspended after 40 days. The loan money was gone, consumed by the crisis. Britain was broke again, but now also bound by American conditions that prevented using traditional tools like exchange controls and trade preferences. Britain's economic weakness forced imperial retreat. India became independent in August 1947. The decision was presented as moral enlightenment and Clement Attlee's Labour government's anti-colonial principles. But the economic reality was determinative. Britain couldn't afford to keep India. Maintaining control would have required military force to suppress independence movements, and Britain lacked the resources. India's independence was the beginning. Palestine, Burma, Ceylon, and Malaya followed. The empire was dissolving not primarily from moral awakening but from financial necessity. The 1949 sterling devaluation confirmed Britain's subordination. The pound was pegged to the dollar at $4.03, but the rate was overvalued. Britain's exports were uncompetitive, reserves drained. In September 1949, Britain devalued to $2.80, a 30% devaluation. The decision was forced by market pressure and made in consultation with the United States. This was humiliating. The currency that had been the world's reserve for a century now adjusted on American timetable, and with American approval. The Korean War in 1950 provided temporary relief. American rearmament created demand for British exports and eased the dollar shortage. But this was a respite, not a reversal. Britain's structural problems remained. Uncompetitive industry, expensive empire, and dependence on American markets and capital. The Suez Crisis in 1956 demonstrated Britain's complete subordination. Egyptian President Nasser nationalized the Suez Canal. Britain, France, and Israel invaded to retake the canal. Britain justified the action as protecting international shipping and maintaining stability. The real motive was reasserting British influence in the Middle East and controlling a strategic asset. The United States opposed the invasion. President Eisenhower and Secretary of State Dulles saw the action as neo-colonial and damaging to American interests in the region. America had several leverage points and used all of them. The United States blocked IMF loans Britain needed. America sold pounds on currency markets, driving down the value. Most critically, America threatened to deny Britain access to American oil supplies, which Britain desperately needed because the Suez Canal was closed. Britain faced a choice: withdraw from Suez or face economic collapse. Prime Minister Anthony Eden chose withdrawal. British and French forces evacuated in November and December 1956. The humiliation was total. Britain had attempted to act as a great power and was forced to retreat by American financial pressure. The lesson was clear. Britain's foreign policy required American consent. When the London gold pool closed in March 1968, there was no warning. Investors woke up and the market was locked. No gold available, no conversion, done. We created the 7-stage collapse survival guide so you never get trapped when the window closes. It shows you exactly when to move your wealth into assets that survive collapse. Before banks freeze, before governments confiscate, before inflation devours your savings. While you can still act. Suez ended Britain's pretense of independent great power status. After 1956, British foreign policy aligned with American preferences. Britain maintained a global military presence, but only where America approved. The special relationship was established, a term describing British support for American objectives in exchange for consultation and minor influence on American policy. Decolonization accelerated after Suez. Ghana became independent in 1957, Nigeria in 1960, Kenya in 1963. By 1970, most of the African and Asian empire was gone. Britain retained some Caribbean and Pacific territories, but the empire as a global system had ended. The Commonwealth replaced the empire, a voluntary association with no enforcement mechanisms and little economic integration. Britain's economic performance from 1945 to 1970 was mediocre. Growth occurred but slower than Germany, France, or Japan. Britain was the sick man of Europe. High inflation, frequent sterling crises, industrial stagnation, and labor unrest. Multiple governments attempted reforms. None succeeded in reversing relative decline. By 1976, Britain required an IMF loan to avoid default, a humiliation for a country that had created the international monetary system. The post-war institutions created to manage British decline institutionalized American hegemony. The IMF and World Bank, established at Bretton Woods in 1944, were ostensibly multilateral but controlled by the United States through voting shares and headquarters location. The Marshall Plan rebuilt Western Europe, but on American terms, recipients had to liberalize trade and accept American economic oversight. NATO provided security, but under American command. The dollar replaced sterling as the global reserve currency. At Bretton Woods, Britain proposed the Bancor, an international currency that wouldn't give any country special privileges. The United States rejected this and insisted on a dollar-based system with gold convertibility at $35 per ounce. Other currencies pegged to the dollar. The dollar became the medium for international trade, the assets central banks held, and the currency commodities were priced in. This gave America exorbitant privilege, the ability to print the global reserve currency, run deficits financed by foreign dollar holdings, and impose costs on others through monetary policy. Britain had enjoyed similar privilege with sterling. Now America had it with the dollar, and the mechanism of transfer was Britain's war debt and post-war economic dependence. Britain's decline wasn't inevitable. Alternative paths existed. Britain could have prioritized domestic reconstruction over global commitments, withdrawn from expensive overseas bases, negotiated managed decolonization while retaining economic ties. But these options required accepting diminished status earlier and more completely. British political culture resisted. Churchill spoke of maintaining empire. Eden tried to reassert dominance at Suez. By the time reality was accepted, the decline was irreversible. American policy intentionally accelerated British decline in some areas while supporting Britain in others. America wanted British military power available for Cold War purposes, hence NATO and the special relationship. But America wanted British economic preferences eliminated to open markets for American goods, hence the Article VII terms and loan conditionality. This combination of support and pressure shaped the transition. The British experience demonstrates how quickly dominant powers can lose status when economic fundamentals shift. In 1939, Britain ruled the largest empire in history. By 1956, Britain couldn't conduct military operations without American approval. The 17-year period saw total power reversal. The mechanism was debt, currency dependence, and institutional subordination. Comparing British decline to potential American decline reveals parallels. America today has enormous debt, over $34 trillion federal debt plus unfunded liabilities. America runs persistent trade deficits. America depends on foreign willingness to hold dollars and finance deficits. If creditors, China, Japan, oil exporters, decided to reduce dollar holdings significantly, America would face constraints similar to what Britain faced in 1945. The differences are also important. America's debt is denominated in dollars that America prints. Britain's debt was in dollars it couldn't print. America has much larger and more diversified economy than Britain did. American military dominance is more total, but the fundamental dynamic, where creditors gain leverage over debtors, still operates. The institutional legacy of British decline persists. The IMF, World Bank, and United Nations were designed for an American-led order replacing British Empire. These institutions are now under stress as China and other powers demand more influence. The dollar-based system is being challenged by euro, yuan, and cryptocurrencies. The transition from American unipolarity to multipolarity resembles the earlier transition from British to American dominance. Britain's experience also shows the limits of cultural and historical prestige. Britain had centuries of imperial history, the world's most powerful navy, global language dominance, and legal systems adopted worldwide. None of this prevented rapid decline once economic fundamentals shifted. Soft power couldn't compensate for hard financial constraints. The speed of the transition surprised contemporaries. In 1945, many assumed Britain would remain a great power alongside the United States and Soviet Union. By 1956, this was clearly false. Britain was a middle power dependent on American support. The shock of this realization contributed to British political and cultural pessimism that persisted for decades. Individual decisions by British leaders mattered, but were constrained by structural forces. Churchill might have negotiated different Lend-Lease terms if Britain had alternatives, but it didn't. Eden might have avoided Suez humiliation if Britain had economic independence, but it didn't. Attlee might have retained India if Britain had resources to maintain control, but it didn't. Leadership mattered at the margins but couldn't overcome fundamental economic weakness. The American side also reveals strategic choices. The United States could have been more generous with post-war aid, allowing Britain to recover strength before demanding trade liberalization. Instead, America used Britain's weakness to extract maximum concessions. This wasn't cruelty, it was rational pursuit of American interests. But it demonstrated that alliance relationships become transactional when power imbalances are large. The Marshall Plan for Europe was more generous than treatment of Britain. America provided $13 billion in grants to rebuild Western European economies from 1948 to 1952. Why was Europe treated better than Britain? Partly because Europe was more devastated and faced communist threats requiring stronger economies. Partly because European countries weren't competitors. Their recovery served American interests by creating markets and allies. Britain was both ally and competitor, and America shaped British decline to benefit American interests. The sterling balances, debts Britain owed to India, Egypt, and others, created additional pressure. These countries had provided resources during the war on credit, expecting post-war repayment in convertible currency or goods. Britain couldn't pay without exports or gold, neither of which it had sufficient quantities. The solution was inflation. Britain allowed prices to rise, eroding the real value of sterling debts. This was wealth transfer from creditors to Britain, but still left Britain weaker than pre-war. The psychological impact on Britain was profound. For generations, British identity had been tied to empire. The sun never sets on the British Empire was literal truth for a century. Losing this status created existential questions about British purpose and identity. Some sought answers in European integration, joining the European Economic Community in 1973. Others emphasized the special relationship with America. Neither fully replaced the lost imperial identity. The economic model that sustained empire, protected colonial markets, resource extraction, manufactured exports, couldn't survive in the post-war order America was building. American vision was multilateral free trade, convertible currencies, and minimal trade discrimination. This benefited American producers who were competitive globally. It hurt British producers who depended on protected markets. Britain had to choose between fighting American preferences and losing aid, or accepting American terms and losing competitive advantages. Britain chose survival. The technology gap between America and Britain widened during the war. American factories were newer, more automated, and more productive. American workers had higher skills and better equipment. American products were often superior and cheaper. British attempts to compete in open markets frequently failed because British industry wasn't competitive. Protectionism could have shielded British industry but violated American conditions for support. The military dimensions reinforced economic dominance. America provided nuclear umbrella through NATO. Britain developed its own nuclear weapons but depended on American technology and delivery systems. Britain maintained military bases globally, but often in coordination with American strategy. British military power became a supplement to American power rather than independent force. You're witnessing a historical pattern that repeats. Dominant powers that overextend, accumulate debt, and depend on creditors lose autonomy and status. Britain experienced this from 1945 to 1956. The mechanisms were Lend-Lease debt, post-war loans, institutional subordination, and currency dependence. The outcome was rapid transition from empire to middle power. The parallels to current American position are worth considering carefully. America's federal debt exceeds $34 trillion. America runs persistent trade deficits financed by foreign dollar holdings. China, Japan, and oil exporters hold trillions in treasury bonds and dollar reserves. If these creditors coordinated to reduce dollar exposure, even partially, America would face immediate financing stress and policy constraints similar to Britain in 1945. The difference is, America prints the reserve currency and Britain didn't. But this advantage diminishes if dollar holders lose confidence or viable alternatives emerge. The euro, yuan, and potential BRICS currency provide options that didn't exist when dollars were unchallenged. Digital currencies and blockchain technology could enable new payment systems bypassing dollar dominance entirely. American military spending, over $800 billion annually, resembles British imperial overstretch. Maintaining global bases, multiple carrier groups, and security commitments worldwide is expensive. If financing becomes constrained, choices will be forced between domestic priorities and international commitments. Britain faced this choice and chose managed retreat. America hasn't faced this choice yet, but the structural trajectory is similar. The question isn't whether dominant powers decline, they do. The question is how quickly and how managed. Britain's decline was relatively peaceful because America was allied power with shared interests and values. The transition from American to Chinese dominance, if it occurs, might be more conflictual given ideological differences and strategic rivalry. This is decoded economics. Subscribe to see the collapse before it happens.